What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 20 free stocks, Weeble is going to give you up to 20 free stocks when you open a new Weeble brokerage account. You put $100 in that new Weeble brokerage account, they're going to give you 3 fractional share stocks. You put $500 in your new Weeble brokerage account, they're going to give you 20 fractional share stocks. Each stock could be valued anywhere from $3 a share up to $3,000 a share. Don't miss this opportunity, guys, to get in where you fit in. Get yourself down in the description box. First link down in the description box. Click on the Weeble link. Open up that Weeble account and get yourself in position. Open up that Weeble account and go get that free stock and go get that free money because we're going to need it, guys. What I'm about to run you through is an absolute emergency. And I told you guys last night that it was coming, and it's here. But before I dive into it, some of you folks who are going to be opening that new Weeble account may not know how to use a self-directed brokerage app. All you got to do is send me an email through my website, www.richardfain.net. It's the second link down in the description box. Send me an email. Let me know you've opened the Weeble account, you funded it, and I'm going to send you a Weeble tutorial video that I put together myself to walk you through the basic mechanics. Again, no expert here, but just trying to help you out because I know there's an opportunity here, man, to build some wealth. And we're going to cover some ground this morning to walk you through this opportunity. But before we walk you through the opportunity, I got to let you guys know what's been happening. So yesterday, on April 2nd, at 4 p.m. Eastern time, 47 came out and did a press conference, and he rolled out the tariffs on the world. And those tariffs were extreme. And the market, when I say market, I'm talking about the stock market, the financial markets have reacted to those tariffs. And what you see happening in our stock market this morning is a byproduct of these tariffs, this war, this tariff war. So what are we at? Where are we at right now? It could get worse, guys, so just brace yourself. Dow drops 1,500 points. Guys, you do know not too long ago, the Dow was at 45,000 points. I'm talking about 2 months ago. 2 months ago. Fast forward, okay, 3 months, and you have a 5,000 point drop in the Dow. You should be concerned. I'm concerned. S&P 500 loses 4% as stock market rout on 47's tariffs worsens. But we got the best 100 days of any recent president in history. Let's keep going. I'm not going to get on that today. But goodness gracious, I could not help myself. The best 100 days of any president in recent history. But you got an S&P 500 that's down by 4% today. You got a Dow that's down by 1,500 points today. Okay, I digress. Let me keep moving. Stocks on Thursday, after 47 unveiled sweeping tariffs of at least 10% and even higher for some countries, raising the risk of a global trade war that hits the already sputtering U.S. economy. This is not coming from Richard Fain. This is coming from CNBC. They talked about a NASDAQ composite that has slid 5%. Now let's go look at the three majors, just so that we can get some focus on this. Let's go look at the three majors. And then we're going to talk about some opportunity. I promise you, we're going to get to the opportunity in a second. But let's talk about where we're at today and why it's an absolute emergency for us as investors. Dow, 40,750. S&P 500 index, 5458. NASDAQ, 16,761. Now, let's go and take a look at where they have fallen from, and then we'll move on. But this is important, guys. This is important because you got to understand where we have come from in a very, very short period of time. So let's look at the Dow. Let's look at the most recent high of the Dow. 52-week high, guys, 45,073. That's the 52-week high. The 52-week low is 37,611. Right now, we're currently at 40,750. Not good. Not good at all. Not good at all when it comes to our stock market, guys. It's being manufacturally, well, that's not a word. Let's do it this way. This is a manufactured stock market crash, in my opinion. Okay? Manufactured. What does that mean? That means, somebody created it. It wasn't by natural design. It wasn't like the pandemic where that was natural. You know what I mean? It wasn't a byproduct of us pumping money into our financial system during the pandemic where we had to make sure people had money in their accounts to feed their families, right? It wasn't us pumping money in we knew in 2022 at some point, pumping all that free money into our economy would have to be taken out. We knew that. We knew pumping all this free money in order to save our country and save people that lived in this country because everything was shut down. We knew pumping money in would at some point have to be taken out. So as Americans, we were okay with that. I was okay with that as an American. Okay, we're in the pandemic. Everything's shut down. We got a lot of less fortunate people out there who need the basics. Let's give them stimulus checks. I was okay with that. I told y'all that. Go back to my old videos from 2020 where I said on record, I'm okay with paying more for folks to be able to get the basic things they need when the whole country shut down. I said that. Take money from me, give it to them for free. If I got to pay more taxes, I'm more than willing to do that. I went on record in 2020 and said that. But I also went on record and told y'all at some point they would need to pull that free money back out of the economy. And guess when that happened? In 2022, they started increasing interest rates, tightening monetary policy, and started pulling that money supply out of the economy to bring inflation down. That's what they did. I was okay with that. Fast forward to 2025, this was all manufactured. This was created by us, right? This is created. We caused this. Now let's take a look at the S&P. Just wanted to give y'all a little history, according to me. So here we go. Here's the S&P. Where did we come from? 52-week high, 6,147 points. 52-week low, 4,953. Where are we currently sitting at? 5,447. What I will tell you is, earlier this year, And I may be, as a matter of fact, let me do this. That way I know I ain't wrong. Let me go into Yahoo Finance and we're going to break this thing down. Let's go into Yahoo Finance and I'm going to tell you exactly when the S&P 500 hit 6147, and that'll give us a little bit more clarification on how far we've fallen because of these tariffs. Here we go. S&P 500 index. Here we go. S&P 500 index. The SPY. Now let's see right here where we hit that 61 at. I just want to make sure you guys understand. Here we go. Here we go. Here we go. Here we go. What did I tell y'all? Less than 2 months ago, right? So on February 20th, 2025, we hit an all-time, we hit a 52-week high of 6,134. 6,134. Let's see if we went any higher than that. And this was on February 20th, guys. This is not even 2 months ago. This was February 20th. We were at 6,134. That's what the S&P 500 index hit less than 2 months ago. We had a thriving stock market, is what I'm trying to tell you guys. Less than 2 months ago, we hit 61 and some change. Fast forward to today. We've fallen all the way down past corrective territory, down to 54 and some change. Let's look at the NASDAQ. Let's look at the NASDAQ. Here we go. NASDAQ. Let's look at the NASDAQ 100. Let's see what we can come up with that. NASDAQ 100. Let's see exactly where we've come with the NASDAQ 100. So, like I said, we started at a 52-week low on the NASDAQ. Oh, here's the NASDAQ right here. Let's take a look at the NASDAQ and see where we are on that. Let's see, NASDAQ. Because I got to get you guys to understand what's actually going on here. NASDAQ composite, here we go. 52-week high, 20,204. That's the 52-week high now, right? And then 52-week low is 15,222. Today, 16,696. So now again, I want to go back to Yahoo Finance, and I want to see when did we hit that 20,000, because that's important to me. And I think it should be important to you because it'll show you how far we've come. And then we're going to talk about strategy. So hang in there with me. We're going to talk about strategy here in a second, or at least the strategy that I'm going to be deploying. You guys have to do whatever you feel like you need to do, but I'm going to do what I believe I need to do. But I need to know where I come from. See, I need to show y'all the extremeness and how fast you can destroy a thriving stock market, a thriving economy. For what reasons? I don't know. Past my pay grade. But here we go. Let's move back. Here we go. Here we go again, guys. Here we go. February 18th. Y'all think I'm lying. Go to Yahoo Finance and type in S&P, type in the NASDAQ, type in the Dow, and then go to historical data. It'll tell you exactly when these things. Listen, man, I said 52-week high. Some of y'all thinking, oh, golly, that was a year ago. No, wasn't a year ago. It was February 18, 2025. The NASDAQ hit 20,090. This is what the NASDAQ hit, guys, less than 2 months ago. So all I'm telling you is the stock market was thriving in February. I've showed you the three major indexes were at all-time highs. They were thriving. How can you take a thriving stock market in less than 45 days? It's in the crapper. I mean, how do you do that? Why would you do that? I don't know. That's above my pay grade. I just want y'all to understand where we was or where we were. I know sometimes my grammar ain't the best. Wasn't a very good English student. But nevertheless, I still built my wealth, right? So you ain't got to be very smart to build wealth, right? You just got to know what the 1% are doing and follow them. They will always, see, you got to take the little bit of financial breadcrumbs that the 1%ers drop for you and follow them, right? I just wanted to demonstrate to you guys where we were less than 45 days ago. Less than 60 days ago, we were at the pinnacle. We were at all-time highs. Do you remember the days? Can you remember the days not so long ago where every day, every other day, we were hitting all-time highs in the stock market? Can you remember those days? I know they're fading fast because now all we get is dip season. All we get is dip season. A little bit of rally and then a great dip season. A sea of red. But that won't last forever, guys. It won't last forever. So you got to hold on. You got to buckle down. You got to get your financial plan ready to go. You got to understand this is an opportunity. So flip it and flip it into an opportunity. Right? You cannot keep the stock market down forever. I just want you to know where we were less than 45 days ago, less than 60 days ago. We were at all-time highs. Every other day we were hitting an all-time high in the S&P. We were hitting an all-time high in the NAS. We were hitting an all-time high in the Dow. Russell 2000 was killing it. Now we got a complete disaster on our hands. Dow drops 1,500 points. S&P loses 4%. Stock market rout. Tariffs worsen. Craziness, isn't it? Just crazy, crazy, crazy. Check this out. Check this out. Let me give you a little bit more color here. Shares of multinational companies tumbled. Nike and Apple dropped 11%. Nike dropped 11% one day. Apple dropped 9%. I looked at my Weeble brokerage account this morning where I got Apple in there, and it's in the red. Bright red. Yeah. Big sellers of imported goods were among the hardest hit. Five Below lost 25%. Five Below, if you guys know what that is, my daughter likes that store, at least she used to. Little items, everything basically under $5. Nice little retail concept, but they got crushed by our tariff war. Listen here, America. We're in a tariff war. You got American companies that are bleeding. Five and Below, 25%. Might be an opportunity if they recover. There ain't 100% guarantee, guys. A lot of these companies will recover. You do know that, right? There's not a guarantee that Five and Below will recover. You're not talking about a Mag 7 company here, guys, who has, 30, 40 billion dollars worth of free cash flow on their balance sheet. I guarantee you Five Below is struggling right now. But it's on sale, 25% discount. If you like that type of retailer, you got a 25% discount. Dollar Tree tumbled 9%. Gap plunged 20%. Tech shares dropped in an overall risk-off mood, with NVIDIA off 5%. Tesla also down 3.5%. But here's what you got to understand, guys, when you're investing, right? When you're thinking about where are you going to deploy this money because of all these discounts, you better make sure you understand this. Mag 7, they're going to recover way faster than Five Below. The Mag 7 will recover faster than Dollar Tree. The Mag 7 are going to recover faster than Gap, who plunged 20%. See, that's what you got to understand. That's why I told my wealth builders on my wealth builder financial community on Patreon this morning. I told them I'm hunting big boy blue chip, Mag 7. That's all I'm hunting right now in this disastrous situation we have with the tariffs and this disastrous situation we have with the stock market. You do understand stock market goes first, economy is second. When you got companies like Five Below, Dollar Tree, Gap getting just dismantled, you understand what's next, right? It's the economy. You understand what's next, right? It's your job. So buckle down and get yourself ready, guys. Get yourself ready. I told y'all, I told you guys last night, if you believe these 60 countries that were on this dirty country list that we publicly said to the whole world, oh yeah, these 60 countries right here, they're just dirty countries. They take advantage of it. We just told the whole world that, right? Do you really believe those 60 countries are just going to sit around and do nothing? You know what they're going to start doing? They're going to start forming alliances against the United States. Financial, economic alliances. Now, ain't nobody going to mess with us any worse than that, but they're going to start meeting amongst themselves, trying to figure out how do they respond to these tariffs. And guess who takes the brunt of all of this? It's going to be these companies like Five Below, who may or may not come back, who may or may not ever be the same again. It's going to be companies like Dollar Tree, where a lot of middle America, Dollar Tree, Five Below, Gap, retailers like that are very important to middle America. I'm just telling you guys, these companies are going to get hit. See, what we have to really understand here, guys, is, listen, that's above my pay grade. All I can tell you, this whole tariff thing, in my opinion, we pay for that. The people that live in America pay for this tariff thing, right? And again, I'm here to just give you my opinion. My opinion is companies like Five Below, Dollar Tree, Gap, just companies like that who their success, the only way they survive is because they get all of these cheap goods and services, these goods overseas that come in here that they can sell at $5 or below. There ain't no Five Below if you can't get the product cheap enough. What I'm trying to say, there is no Five Below if you can't get the product cheap enough. You can't call yourself Five Below if you're charging $10. You can't call yourself Five Below if you're charging $15, right? The whole point of Five Below is when you walk in here, it's below $5. That's what I'm trying to tell you. So a 25% haircut. Hopefully that don't last. Hopefully Five Below rebounds and comes back. But my point is this, really who suffers are these small companies, guys, and us. These big giants, NVIDIA, Microsoft, Tesla, they're not going to suffer. Why? Because they got 25, 30, 40 billion dollars in free cash flow sitting on their balance sheet. They're not going to suffer. But Five Below will. Dollar Tree will. Gap will. And like I just said a few minutes ago, some of these companies won't come back from this. And that's sad. That's sad. This is a sad day for America. To see companies that have worked so hard to try to put themselves on the map and provide decent products and services to America and the people that live in America to be dismantled like this. And very casually, oh, here are the 60 countries we're just gonna crush because we can. We're America. We're just gonna do what we wanna do. But again, guys, if y'all understand history, countries that have taken that stance have not. It came back to bite them in the butt at some point. Go look at history. I'm a proud American. Y'all know I love American. This is where I live, and I'm gonna always be for America. I'm an American first. But go look at this. When these nations, these superior powers, these countries and these empires through history that have taken a stance like this, eventually it came back to bite them. Hopefully for us, we will hopefully be in a position where we will help some of these companies like Five Below and Dollar Tree as they struggle. Because like I told you, stock market goes first, then comes the economy, right? So what'll happen is, as things get worse in our economy, in our stock market, as things get worse, because I think they will get worse before they get better. I just think they're gonna get worse because I still don't believe the American people or the people who live here in America at the center of all of this. They're not the focus. Somebody else is the focus, but it's not, Bob or Mary over here, struggling, trying to keep food on the table. They're not at the center of all of this. That's my opinion. So here's the thing. These tariffs already have caused some chaos. Now, will that be permanent chaos? I don't know. I can't really speak to all of that. What I can tell you is what's happening today. And I've walked you through what's happening to the stock market. And I told you what's next is the economy. I'm not an expert on the economy, but you ain't got to be a rocket scientist to figure out if you got a stock market that's made up of nothing but companies is failing, and companies are losing 25% of their stock price in one day, like Five Below, 20% like Gap. You don't need to be a rocket scientist to figure out if companies who basically make up all of this, the economy and the stock market, that's the common denominator, right? Consumers and companies. Your economy is not too far behind. You already know right now that the economy for the first quarter of 2025 will be a negative GDP. So all that means is negative growth. There is no growth. Actually, the economy is shrinking. See, we come out of 2024 with a plus 2%. That means our economy grew by 2%. It's expanding. Now the economy is contracting. You see what I'm saying? So you got a stock market that's falling. You got an economy that's contracting. And who makes up those two things? Consumers and businesses. So who's suffering here? Consumers and businesses. That's who's suffering because of all of this. The 1% is not suffering. Because in my opinion, all of this chaos that's happening right now is to provide the 1% tax breaks. This whole notion of, oh yeah, we're doing these tariffs so that the normal person out here don't have to pay no taxes. Well, the normal person, if you look at the taxes that are being paid, we pay 10% of the taxes. They pay 90% of it. So it makes sense for them to want to get rid of income taxes because they pay 90% of them. They pay 90% of the income tax. So it makes sense to want to get rid of income tax and come up with this tariff thing. The problem is you got to be able to tariff people to the tune of about $5 trillion a year. Because that's what that's what the taxes that the IRS bring in are around $4 to $5 trillion a year. So in order to do away with income tax, you would have to tariff and create out of those tariffs at least $4 trillion. And I'm not sure how you're going to do that. I'm not sure how you're going to do that. I'm not sure how you're going to do that. But I think ultimately that's sort of what's going on here is, since we pay 90% of the taxes, let's get rid of the taxes. Let's get rid of this IRS, the taxes. We got to get rid of the income tax. How do we get rid of the income tax? We're going to get rid of the income tax by doing tariffs. And tariffs is going to be our mechanism to create enough income to run the government. But in order to do that, you got to start, weeding out some of these government programs that we don't believe make any sense. So let's weed them out, right? So let's reduce the amount of money it takes to run the government by weeding out some of these, you know what I'm saying? So again, guys, you got to understand where we're at in order to know where you're going, right? You got to know where you're at today in order to plan for where you're going. How do you plan for where you're going? Well, here's what I'm going to be doing. I'm going to take the Magnificent Seven. I'm going to take the S&P 500, and I'm going to take information technology, which is my blueprint 1.0, and that's what I'm going to continue to double down on. Because I believe at some point, America is resilient. Our businesses in America, for the most part, are resilient. I believe we'll come back at some point. I don't know when, guys. All I can do is continue to invest for the future. But I have to invest in companies that I know have a historical track record of making it through stuff like this. And I think the Magnificent Seven gives me the best opportunity. Five Below ain't gonna give me the best opportunity, not for my portfolio. So I can't buy Five Below. I can't buy Gap. I can't buy Dollar Tree. They may not make it back. But I'm betting that through all of this hell we're going through right now, I'm betting that the Magnificent Seven survive. I'm betting that the S&P 500 survives. I'm betting that information technology survives. So for me going forward, that's where I will be putting my money in Blueprint 1.0 and just be consistent. Came out of 2 years worth of glorious profits in my stock market portfolio. And within 60 days, the whole portfolio is down. Pretty much getting ready to wipe away everything that was gained the last 2 years. We're going to wipe it away in 90 days. That's where we're headed, guys. But I believe in America. I believe in the people of America. And I believe in our resilience. And I know right now it's not looking good for us. But we will get through this. We will get through this. So just know that, understand that, and hopefully, guys, we will get this thing turned around at some point. Well, I appreciate y'all, man, for rocking with me. I'm going to get ready to get on out of here. Do me a big favor, if you don't mind, get yourself down in that description box, click on that Weeble link, open up that Weeble account. Make sure you go get up to 20 free fractional share stocks. And that way, listen, man, you at least have an opportunity to start building some wealth with that Weeble offer. Like I said, first link down in the description box, click on that Weeble link, get yourself and go get yourself some stocks. And hopefully, guys, this thing will last. And if you get an opportunity, go check out the Wealth Builders, which is my financial community on Patreon. Go check it out. It's the second link down in the description box. Go check out that Patreon link and or my website link, which will take you over to Patreon, and consider joining the fastest growing financial community on Patreon. I really would appreciate that, guys. We'd love to have you as part of our team. So certainly consider going to do that. Yeah, man. So if you're stopping by the channel for the first time, first of all, before I get out of here, let me give y'all a couple quick things here. Weeble, get yourself down in the description box, click on that Weeble link, get you up to 20 free fractional share stocks, guys. Don't miss out on those fractional share stocks from Weeble. Like I said, it's the first link down in the description box. Go click on that link, get yourself some free stocks. $100 in the new Weeble brokerage account, you get 5 free stocks. If you put $500 in the new Weeble account, you get yourself up to 20 fractional share stock. Don't miss this opportunity, guys. It's very hard right now to build wealth, but we can do it. And you need a good brokerage app to do it. Why don't you try out Weeble today? Like I said, first link down in the description box. Also, www.richardfain.net is my website address. I got 10 big boy blue chip digital products that can help you out, guys, in these hard times that we're getting ready to go through. You're going to need some financial literacy. Those digital products can help you out. Also, while you're in the website, like I said, second link is the website. While you're in the website, consider joining the fastest growing financial community on Patreon. We're called the Wealth Builders. We got over 1,900 wealth builders in our financial community. We'd love to have you as part of our financial community. Why don't you give us a shot? Click on that join button. Click on that membership button in the website. It'll take you over to Patreon. You can sign up for the financial community. We'd love to have you. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace.